What's up, everybody? This is Jimmy with Trading Decoded. It is January 17th, 2024. It's 4:07 in the afternoon. This video, unlike yesterday's, even though yesterday's was supposed to be short, this one's going to be pretty short. We got a lot of movement later in the day that was much cleaner than the movement in the morning. But by then, most of the people who were trading with me were already done. And, you know, truthfully, there's just not much different going on in the market. You know, if you're trading support and resistance levels, you know, define a direction of the move around the time that you want to get into your trades. If we're trending down, you want to be looking for puts. There are some things that we talked about today that make your odds of winning in puts a little bit better than not. And we can go over that in this video, but we had a call put scenario today. We played the puts, we played the calls, we got paid on both, and you know, most people are done trading after that. That's kind of the route that we're trying to take, right? I don't know about you guys, but I'm trying to work less and make the money I need during that less time. And if you can get comfortable doing that, why would you not want to do the same? More trading doesn't mean more money. Anyway, let's go ahead and launch chart and see what we had going on. So pre-market range was, there's a lot going on here. Let me well, let's just talk about it. Pre-market range, 472 to basically 472.91. So a dollar range, give or take. I'm not going to go over the same things I always go over, guys. If you watch my videos, which it's the same 1,000 people that do, I hate to bore you with the extra or rehashing everything that we say at the beginning of every video. At this point, I think people are just here to either confirm what they saw lines up with the way I saw it, or you want to know if I've lost money. Unfortunately for you, today is not that day. They're pretty rare these days, which I'm very happy about. With that said, what was our put scenario? Well, so first of all, 3 targets low. We hit all of them, and then we had 1, 2, 3 targets high, some futures lines. We really had a hard time moving high today. But yesterday's low of day, 473.06, and we were trending down in pre-market. The market didn't like or get the reports that it got, and so it started to sell off. Does that mean it's going to go down all day? No, not necessarily. So we don't think that way. However, what does it mean? It means that at 9:25 in the morning, when we come up with our call put scenarios, that we would most likely have our puts queued up, ready to go, because the trend at the time was down. It doesn't mean that the puts are the play going to happen. It just means that, you know, you should be prepared in the event that the put line is the one we do end up getting presented with first. So the put line was a close below. Okay, a close below 471.73. We were looking for a target of 471.37. That's a fair sized move. Now, many of us got into this trade a little bit earlier than the candle close, and the reason was this. Qs had started selling off hard. ADD at the time that we entered this trade, which was actually on this green doji, ADD had started printing a red candle too. So we saw confluence. We were hoping to take advantage of said confluence. Some of us got in a little early, and then ADD started to turn green. That was butt puckering, if you will. But lo and behold, we got in at 9:31. We were maintaining this downtrend, so that was good. The worst case scenario was if this doesn't work out, that trend line is going to become our stop loss. We never had to worry about it. And then the Qs just dragged the market down and straight to where we wanted to go. Now, depending on when you got into that trade, some people got 15% because they got in a little bit late. A lot of people made more than 25% on that trade. For me, that was a 20.3% trade, line to line. I left some money on the table. I didn't care. I'll take 20% in a minute and a half without hesitation, 100% of the time. Put line played out. Okay, we got below it. even if you waited for a candle close, yes, there was not as much money left there, but it was still a 20-cent move. It was still a 10 to 15% win, 10% minimum. So whether you're a conservative or aggressive trader, that's not for me to decide. That's for you to decide. But the reason we decided to take the trade were the same. Qs were selling off, and ADD at the moment was looking like it wanted to do the same. So we took the trade, and you got paid for it. Now, if you held longer than that, hoping for more, well, you puckered up again and were saved by the same line that got us in, acting as resistance, right? It started as support, turned resistance. It was support here, it was support here. We needed that support to fail. If it did, we expected it to go down to the next support. Well, by happenstance, we happened to know where that next level would be, and well, that's why our target was what it was. We're still trending down, but then we started to build a whole bunch of wicks on the bottoms of these candles. Now, as I asked the question in our community, when we see these things, because I'm taking more the stance of, I'm going to ask my members questions so that I know that they know what the hell they're doing here. Okay, this is not a call out service. Okay, this is me teaching you how to read a chart so that you can feel comfortable about applying that knowledge to your own trades. Nothing more. If you're looking for more than that out of our community, we're not the community for you. We're not going to dig deep into that, but that it is what it is. We're here to teach you how to take your own trades, not tell you how to spend your money. Okay, I'm not giving you the ability to blame me for the buttons that you push. And neither is my other moderator that has a trading room as well in our community. We are trading very specific rules for very specific reasons, and we're teaching those rules and reasons to our members. That's it. Anyway, we recognize that we're struggling to move lower. So puts are a little bit sketchy. Okay, we're not really liking puts anymore at this point, even though we're trending down. We do close above that downward trend line, which automatically makes us put puts on alert anyway. But Jimmy, we're still below the put line. I get it, but you can't argue that there's now resistance here, or we broke the downtrend and we have support here. Okay, if there's something you see there that makes you feel comfortable buying puts somewhere around here, and in respecting the support, or if you're thinking it's going down here with all these wicks on the bottoms, yeah, that's too rich for my blood. So we end up moving down, putting in a new low a day. Really never getting through this ended up being a demand zone. Although I don't trade support and demand, or supply and demand. I asked about 3 candles into this, is for those of you who trade supply and demand, is this a demand zone? And sure enough, it was. So it makes sense that we were struggling to move lower here. We break the downtrend and hold above it, right? Moving up. But Jimmy, when would you buy calls? Not until we get to my call line. That's when I'd buy calls. There's no gray area here from you guys, right? Below that line, I felt better about puts. But my puts was this line. We crossed it. I got into them. Okay. We have moved out of that range. We have broken the downtrend. It doesn't mean calls. Okay. It doesn't mean calls. However, while we're here, not that I didn't play this one, but we were bouncing around higher lows, higher highs, and then we put in a lower high right here. Somebody had asked me, Jimmy, is your put line still stand? And I said, well, it wouldn't have, but we are coming off of a lower high now. There's a better chance that we get through the put line and head down to the yellow line again. I didn't use that information to take my own trade. I had already taken a good trade here. And at this point, I was happy to be done for the day, right? So for those who took that advice and played that play, congratulations. You once again made a solid 15 to 20% on your money in a minute and a half, if that. We bounced off that support, moved right back up to resistance, higher low, lower high. It's a wedge, higher low. We break through, new resistance. Guys, this was not a comfortable time to trade if you were trying to trade this. This is why I wasn't interested in trades. Look at that same zone in pre-market. It's crap in here. Okay. I'm not surprised at what was going on in this area. That's why I wasn't interested in playing anything in that area. But I was interested in playing if we got out of that area. It's a pretty simple concept. What are we looking for? We're looking for a breach of 472.45. Okay, where are we expecting it to go? Well, we'd all love it to run straight up to 472.91, but there's some things in here you've got to worry about, which we make very, very clear long before that opportunity even exists in the first place. Guys, if you're taking calls here, you need to be aware that there is a potential resistance there at 472.56. Now, we have a gap to fill between that resistance and the candles above it. If we fill that gap, which all gaps eventually get filled, that would give you at least a 20-cent move. But if that happens, I'd be expecting us to move up towards 472.77 anyway. That would be my minimum target for this move to the upside if we play the call line. We got to the call line. We breached it. Yes, I know that that's a sketchy candle to get in on, but it was my rule. If we breach the line, I'm going to take calls. Now, leading up to the point that we actually got here, I was being asked, Jimmy, are you still interested in playing the call line? And truthfully, at this time, I was not. However, I had also said it would take some doing to convince me that this mess that we're dealing with is comfortable enough to justify taking that trade. Does anybody see the difference between this move and every other one leading up to this point? I know the people in my community did, because they felt a lot better taking this at this time than they would have at this time. And I'll spare you if you don't see it. Does this move right here not look a ton cleaner than just about every other one that at this point during the day? This had buyer momentum behind it. Okay? Buyer momentum. I like momentum. I like the fact that we're putting in higher lows and higher highs. I like the fact that we made it to the point that proved to me that it was worth risking my money on calls. Yes, Jimmy, but what about buying calls down here? Did you know that was the low of day at the time? I didn't. And I'm not going to assume that either, and you probably shouldn't either. I wait for the market to prove to me it's worth taking my money in its hands. Okay? I stack probabilities in my favor. That is why I win more often than I lose. There's no magic 8-ball. There's no crazy indicators, guys. This is simply allowing probabilities to stack in my favor so I have a better chance of winning. That's it. And I wait for those probabilities and I execute when they're given. I executed. We got in the trade. Yes, this pullback sucked. Yes, we had a stop loss at a candle close below 472.32 was our stop loss for that trade. Okay? It's not even 20 cents away from where we wanted to get in. So the pullbacks, yes, they're a little nerve-wracking sometimes, but hey, it is what it is. If you know where you're supposed to get in, you execute. If you know where you're supposed to stop out, you execute. If you know where you're supposed to exit with profit, you execute. Execution every time. In, out. Now, where were we looking to go? The resistance from these guys here. Okay? 77, 472.77. Some people got out a little sooner. They scalped this position because we closed the gap and accepted that as their profit. I asked for a little bit more. I wanted 77. What did we get to? I don't know, 77 to the penny? The high of that candle, 472.77. Is it an accident that it stopped there? No. And if I didn't take there, would I have taken the next time we got there? Absolutely, because in my stop loss, I would have never been stopped out either, although it would have been uncomfortable to hold this pullback. But yeah, guys, just play what she gives. Be willing to accept what she's willing to give. That there was also a 20% trade. So on two trades, 20.3% on one, 20.1% on the other. It was a good day. was a good day. That's the only 2 trades that I took for the day myself. Most of the people in our community were done after this one. Several were done after the second one, and almost all of them were done after the third one for those who are in my trading room. Okay, I don't know about you, but having 1.5 hour work days is a dream job. That's a dream job, especially when you can make more money than I used to make in a week at my day job for 40 hours of work. Then we just kind of broke the uptrend. Okay, so at this point was puts the reason to take puts right here because of this? No, absolutely not. The fulcrum. We want to stack probabilities in our favor, and this is the last thing we're going to talk about. I'm not going to go over the rest of the chart. The reason this dotted line is here is because this is the fulcrum of the market, right? If you're looking to find where that area is, we're basically just trying to find the middle point between the high of day and the low of day. That's a 50% retracement. I am of the belief that above that 50% point, okay, right, which is right here, this line, at this point in the day, that 50% line, anything above that, there's more buyers in the market than there are sellers. Anything below that, there's more sellers in the market than buyers. Okay, you can also find that sometimes by using VWAP. Oops, that's not VWAP. VWAP. Okay, now VWAP is a lagging indicator, right? So a 50% spot on the chart is going to be different depending on when you check it. But let's just say at this time of day, obviously the 50% line is not going to be here. By the time we got here, your 50% line is here. Okay, I'm making an indicator for our members that will plot that in real time with a green section above the 50% line and a green box below the 50% line. It is not a reason to take trades. It's a reason for you to say, ooh, we're in the red zone. Maybe I should be looking for entries for puts. If you're taking calls in the red area, and when I say red area, this is my belief it's going to look like after the indicator is complete. This is what it would draw for you in real time throughout the entire day. As we put in new highs and new lows, it's going to move the center point of this zone for you. If we're in the green zone, be expecting your odds of winning on calls to be higher than if we're in the red zone. That's it. It doesn't mean you have to play calls in the green zone. It doesn't mean you have to play puts in the red zone. I'm trying to help people reduce their choices so that there's less of them to worry about, less for them to think about, right? Now, when don't you want to buy puts in the red zone? When you're putting in higher lows and higher highs. Guys, just apply some logic to this. Don't just willy-nilly into your trades, right? I'm just trying to point out probabilities for you, okay? When would calls in this green area be off the table? When the uptrend ended. But it doesn't mean that puts are necessarily the go-to spot either. If we've broken the uptrend and we get into the red zone, then consider puts. But Jimmy, what about all this room, this move to the downside you missed? So what? I'm not interested in that. I still know that there's more buyers in the market at this point than there are sellers. Okay, that's just how I play. That's how I trade. If it doesn't align with your thought process, then don't do it. Right? But I'm not here to argue how I see the chart and what works for me. I'm here to share with you what works for me and why my success rate for my trading is what it is. And there's no arguing it. Okay? I'm not going to argue with you about it, right? Well, it's impossible to have a win rate higher than 90%. Is it? Or is it just impossible because you can't walk away after your win rate is 100% for the day? That's the argument. I think that most people have lower win rates at the end of the day because they don't know when to stop trading. If you took the 2 trades today that we called out 5 minutes before the market opened, you had a 100% win rate today. If you chose to take other trades that were not as good of a probability chance of winning, you put that win rate at risk. I choose to not put my win rate at risk. So in order for me to do that, I take a position size that allows me to make the money I need to make to pay my bills, and I take my trades, my high probability trades. Now, people will look at my style of trading and say, that's way too risky. That's not for me. And that's fine. I play risky trades in your eyes, and that's fine. But my trading style appeals to me, and it appeals to several hundred other people in our community, and it's working well for them, just like it works well for me. But if your P&L, because of your position size, is what's forcing you to continue to trade, I would recommend that maybe you take smaller wins until you build your confidence up and your account up. Take those smaller wins, afford the ability to scale up while taking those smaller, quicker trades. That money then becomes meaningful income to you. But by putting yourself in the position to constantly put your winning trades at risk by trading more often, you're also putting your progress at risk as well. That's just how I see it. I could be wrong. I'm wrong to you. I'm right to me. It's not a debatable thing. It's just what works for some doesn't always work for others, and vice versa. With that, we're going to wrap it up, guys. It's the same old thing. I trade support and resistance. I trade with the trend. I wait for breaks of support, looking for it to go down to the next support. I look for break of resistances, expecting it to go to the next resistance. And if you could spot where those points are, and you can recognize when we put in higher lows and lower highs and lower highs and higher lows, you can protect yourself on all sides. All right. With that, I hope you found some valuable information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, there's a link down below. We'd love to have you. Okay, there's a bunch of people come in all the time. They enjoy it or they don't. If they don't like it, they use their free week. They've lost nothing, maybe gained some information that's helpful to them in the future, and they don't become paying members. But if you like what you get for that week, expect it to be as good as that, and actually some additional perks for being a paying member. Also, check out our website, www.trading-decoded.com. And hope you all have a fantastic day. Tomorrow is a half day for me because I'm going to be taking my kids to somewhere for their birthdays. I have twins that their birthdays are on Sunday, and we're going to Disney World. So we'll be half day tomorrow, Thursday, and off on Friday, and I'll be back on Monday. Hope you all had a fantastic day. Till tomorrow. Love you guys. See ya!